All right, let's get right into it. If you're even thinking about buying a condo, or maybe you already own one, you really need to hear about some major new rules that have just been rolled out. Seriously, they could be the difference between getting a mortgage and getting denied. So today, we're going to break down these new financing regulations from Fannie Mae and Freddie Mac and figure out, are they a helping hand or just another hurdle for homebuyers? And I know this might sound like some boring, obscure financial rule, but believe me, this one hits right at home. We are talking about the very rules that could decide whether or not you get the loan for that condo you've had your eye on. The dream of homeownership is a big, big deal, and these changes, well, they're shaking things up. And just so you know, this isn't some tiny niche issue. Not at all. We're talking about a massive slice of the housing market. There are 5.4 million, that's right, million, owner-occupied condo units in the United States. That is a huge number of people, of families, who are going to feel the impact of these policy shifts. And to put that into perspective, condos make up more than 6% of all the homes that people own and live in. They are an absolutely critical piece of the American housing puzzle. So you can see why, when the rules for financing them change, the ripple effects are felt literally from coast to coast. You know, this really gets to the human side of all these numbers. For so many people, we're talking moderate income families, first-time buyers, condos are the most realistic, the most accessible way to get a foot in the door of homeownership. They're often way more affordable than a single-family house. So, what is the problem that these new rules are even trying to solve? Well, it all boils down to one word: insurance. Over the last 5 years or so, the cost of insurance for condo buildings has just gone through the roof. It's not just another line item in the HOA budget anymore, it has become a major roadblock to getting a mortgage. Now, you hear a ton about Florida in this conversation, and for good reason. A full 20% of all U.S. condos are right there. And you know, the state has been hammered by natural disasters. But look at the chart. 80% of condos are outside of Florida. This is a nationwide problem of affordability and access. And that brings us to the main event, Fannie Mae and Freddie Mac. You know, the government-sponsored giants that basically prop up America's mortgage market. They have stepped in with a whole new playbook, a new set of requirements for any condo project to be eligible for the loans they back. So here's the thing. This is a really delicate balancing act. On one hand, Fannie and Freddie have to protect themselves from risky loans, on buildings that aren't insured or maintained properly. But on the other hand, they can't just slam the door on millions of perfectly good buyers. And that tension, well, it leads to some good news and some not so good news for condo buyers. Okay, let's start with the upside, the good news. Some of the new rules are actually designed to create more flexibility. And the hope is that this will help lower costs for the condo associations and, at the end of the day, for you, the homeowner. So what does this actually mean for you? Well, they've loosened up the insurance rules. For example, they'll now accept cash value coverage for things like a roof, which is cheaper than demanding full replacement cost coverage. They're also being more flexible on the deductibles. And here's a real win for smaller buildings. Projects with 10 units or less are now exempt from some of the tougher rules. That's a big jump up from the old 4-unit limit. The goal here is pretty simple, right? If the condo associations can get insurance that's more affordable, they can keep your HOA dues from skyrocketing. And when the dues are lower, the units are more affordable, which means, you guessed it, more people can actually qualify for a mortgage. That's the win. But you remember that balancing act we talked about? Well, for every bit of good news, there seems to be a new challenge. The flip side of these changes introduces some new hurdles that could actually drive up costs and make everything more complicated. Okay, this is a big one. Lenders used to have this option called a limited review for certain loans. It was faster, it was simpler. Well, that's gone. Poof, vanished. Now every single project review has to be a full review, which means digging up way more documents and doing a complete budget breakdown from the HOA. And that means more time, more work, and yep, more cost. And who gets hit the hardest by this? It's the smaller local lenders. See, a lot of them don't sell loans directly to Fannie and Freddie. They use these middlemen called aggregators. And this new, much more difficult process makes it harder for those smaller guys to compete. For you, the buyer, that could mean fewer loan options to choose from. All right, this next one is a huge deal. Fannie and Freddie have massively increased the minimum amount of cash a condo association has to keep in its reserve fund. That's the rainy day fund for big repairs. It's jumped from needing 10% of the annual budget set aside all the way up to 15%. And what you've got here is a classic trade-off. Long term, yeah, having more money in reserves is a great thing. It makes the building financially healthier and helps you avoid those monster surprise bills down the road. But in the short term, the only way to build up that fund is to raise your monthly HOA dues, which makes living there more expensive right now. So, as you can probably tell, this is a super complex issue. There are pros and there are cons on both sides. The rules are trying to find that perfect middle ground between being financially responsible and keeping homeownership affordable. And it's pretty clear they're not quite there yet. And one of the biggest areas that still needs work is how they define critical repairs. Right now, the language is, well, it's a little fuzzy, and that ambiguity is causing real problems. Because if a lender isn't totally sure what counts, what do? They play it safe and might just deny the loan. And listen to this. The Community Home Lenders of America put it perfectly. They're seeing minor problems, things that are not a big deal, get flagged as critical. And what happens then? It can trigger a bunch of unnecessary costs, cause huge delays, and just create a ton of stress and uncertainty for both buyers and sellers. And let's just circle back to why all of this matters so much. The average age of a first-time homebuyer in this country has now hit 40. In a housing market this tough, condos aren't just another option. For millions of people, they are the only realistic path to building wealth through owning a home. Which leaves us with a really important question to think about. These rules are trying to make every single condo project financially flawless. But in a housing market that's already so tight, are we letting the search for the perfect building get in the way of a home that's perfectly affordable? It's the big question we'll all be watching as these new rules continue to play out.